Maybe. Good morning. I'm here with Steve Bohaman from Loan Depot. This is our first Real Talk live show. Welcome, Steve. We are so glad to have you with us this morning. How you doing?
Doing good, doing good. Thank you. Thank you so much, Rima, for inviting me to be your guest. So I'm super excited to be here.
Excited to be here, and we appreciate you. And today, everybody's talking about mortgage rates, about the interest rate, which has been going crazy for the last almost year, and gets crazier and crazier. So what's going on this morning in the interest rate world? Can you fill us out on that and let us know what's going on?
Yeah, well, the news is that rates are kind of creeping their way up. They're moving up a little bit. This week, especially like right after the holiday weekend, you saw the rates significantly move up on Tuesday. And this whole week has been kind of creeping up a little bit. We had some improving in pricing yesterday, but sure enough, today you saw that the stock market and the bonds are moving up a little bit. So right away we saw the rates kind of fluctuate a little bit today. So definitely trending up. It's still not like historically, like it's still historically low from when you're looking at it in the market. But you are seeing those fluctuations starting to kind of creep up. So definitely, if you didn't lock your rate in the last 48 hours, like you want to lock like right away. So
yeah, we got so spoiled with the low interest rate. Borrowing money never been any cheaper, right?
yeah. I think you saw historically low, throughout last year, where you saw rates dipping under 2.5%. So if you took advantage of that, that's amazing. Like, make sure you locked it in, and you won't have to refinance ever again. But definitely, it's still a good time to take advantage of the current rates, even though they're trending up. Compared to how it's been in the last 10, 15 years, they're still historically low.
And what is the interest rate today, as of today, this morning?
So today on conventional financing, you're probably going to be looking closer to in the high twos, probably like about 2.8 to 2.99, depending on credit again, and depending on like down payment and stuff like that. FHA, you're probably around the same, around 2.75 in that range. Everything again, it's just going to be depending on the type of loan program and also the type of down payment and interest rate and property. So.
Right.
But you're still under the threes. I think you could still manage to get and lock in a rate under the threes right now.
Well, still amazing, comparing to 5-6% that we've seen in the past. And, like I said, borrowing money never been so cheap. And it's still a great market to buy a home and borrow money for that low interest rate, because you still can get mortgage under 3% in today's market. What do you see as far as from your lending side? I know Loan Depot is huge, and you guys are so involved with everything that's going on. Where do you see the mortgage going moving forward? Do you see kind of like any big changes gonna happen, or like I'm hearing that we might go up a little bit towards the, moving towards the mid-year, end of year? Where do you see on that end, on your end of the world?
Honestly, my opinion and from what I've been seeing from my colleagues is that you're going to see the rate still trending up, not too crazy where it's going to go, to over 3.5 or 4%, things like that. Like you're I think at the highest peak this year, you're probably going to see the rates go back to the low threes, 3.25, in my opinion. And that's just because of the economy, and the market. And you're seeing that. In the last, with the new administration and with everything going on here in the last, 2-3 weeks as far as the stimulus, and you're seeing the economy starting to recover a little bit, and that's being gauged with the interest rates. So a good factor I would say is probably from now till June, depending on how the economy trends, and if it's trending better, you're going to be a factor that's going to show you that the rates will still keep trending higher here throughout this year. For any reason things come up again, like we don't have a crystal ball, so we don't know exactly. But depending on what happens with the economy and what's going on within now till June, if you see that the economy still is struggling and it's not getting better, or there's still more unemployment, and at that point you'll see the rates still, kind of stagnate and even, maybe go down a little bit, but you're not gonna. I don't think we're gonna see rates again back in that 2.5 or under that in that market again, just because you're seeing a lot of positive outlooks right now. So that's kind of what we're seeing out there.
And what kind of challenges you are facing in the lending world? Like we know from our end, because we deal with so many lenders, so many other third parties. I know you guys been amazing to us with your loans, but what do you see as far as challenges, timelines, appraisal issues that Loan Depot is facing today with your lending world?
One of the big challenges, and I think you've seen it too, is probably in the appraisal side. There's a lot that, because of the market being so competitive, a lot of overbidding. There's a lot of a lot of that going on. So one of the big factors is that so many transactions are still happening and not enough appraisers out there, that you're seeing a little bit of delay on getting that appraisal report. So it's really important always for your lender and your clients to be on the same page, and as soon as you have an offer accepted, getting together with your lender to lock in your rate, which is the most important, disclosing your loan estimate, so that way we can order your appraisal on day one. You want to get that ordered, so that way we can get that going and try and get that in within those 10 days or less. But that's the big factor there that we're seeing as far as delays on that. And then as far as values, you're seeing, because of the overbidding, sometimes you might get appraisal values coming in a little bit lower than expected. So that's why I always say it's really important to be working with the right agents, the right team to that know the market, where they can advise your clients to hey, if this is getting overbid and we don't see that value is going to come in, it's just going to save you time and save you money, knowing that, hey, this is not you don't want to put in an offer that high if it's not going to come in, if it's not realistic. So
Right.
we're starting to see that a lot too, and that's a good conversation you got to have with your agent, to kind of know exactly what price point you want to put in and submit that offer. But aside from that, as far as for the appraisal delays, as on underwriting and processing, we did have, and I think most lenders saw a little bit of delay on that going last year because of so many applications coming in and because of where the rates were at that time. I think we've caught up a lot, to Loan Depot, and going into November, December, and even now, our turn times are pretty quick. So, and that's something another factor that comes into when you're submitting your offer is, can you close on time? How fast can you close? So, those things have been kind of taken care of, where we can close now, within those 30 days or less, and make that offer even more competitive. But
Right.
for the most part, I think we're starting to move pretty quick with everything.
Nice. And speaking of the bidding war and the multiple offer situation and properties, most of what we're seeing, it's going above list price. And
Oh, yeah.
we're seeing a lot of appraisals, like you mentioned, that is not coming in at value. And the conversation needs to happen between lender and the agent and their realtor, to just make sure that the buyer is prepared for that bidding war, have that amount of money or that cushion to cover that appraisal, and everything has to be kind of in front of the buyer to make the right decision. Because even if they pay a little bit more what the property is worth in today's market, there's the most amazing interest rate that they can lock a 30-year loan with, which on the long run, it's going to pay off way more than just paying the appraised value and having interest rate 1 or 2% more. Wouldn't you agree with that?
Yeah, definitely. No matter what, because property values will probably still trend, higher because of the competition, not having enough inventory. If you're paying a little bit more for the property now, but with the lower interest rate, you're in a better scenario than waiting, down the line to see what happens with the properties, to see what happens there. but ending up with a higher interest rate. You know, like right now, you'll still save, like if you run the numbers, you'll still save a lot more in interest long term and end up paying less for that property, you know, buying it now with the lower interest rate than waiting to see what happens in the future. You know, so that's one of the things that if you're ready, if your client, if the person is, you know, if you're ready, well qualified, and you're ready to buy, now is the time. You know, now is the time to take advantage of those rates, and working with the right team together. Even though there's a lot of competition, you work with the right team, you're going to get out there and you're going to be able to get your offer. They're going to be able to get your offer accepted. So.
And I mean, from my side, like I hear a lot of clients waiting for the market to crash. Like the market's going to crash. I'm waiting to buy for the market to crash.
Yeah.
And before we went on this broadcast, me and you had the conversation of like, the market is so strong as far as having so much equity in buyers and in sellers' homes right now. So that's the difference of what's happening today. Even though a lot of people, they lost jobs or their income have shrunk through the pandemic, we still have so much equity all over United States. And what do you see from your end as far as are you seeing any foreclosure coming soon, or any distress on the loans that we are seeing, or anything that you can share with us?
I know there's always been that rumor out there that there's, foreclosures, things are going to start coming that could definitely affect the market. But, personally, from what I've seen is that, the government and the lenders are, there's a lot of stimulus coming in to help the homeowners. The last thing they want to do, or the last thing the lenders want, is to foreclose on a house. So you're seeing them helping out, engaging, and from the forbearances, like they're extending that to give homeowners an opportunity to get back on their feet, even though they might have lost their job or might have missed income. They're getting that time to get on their feet and get back to paying the mortgage, so they don't lose the house. So you're going to see a lot of that, where there's not going to be a lot of foreclosures because of that, because the lenders are being very proactive right now. I've seen, even some lenders going into where they're able to refinance clients to help them lower their monthly payment. There's just a lot of programs being out there to help the homeowners. So you're not going to see a lot of foreclosures. So I don't think that's really going to come up too much. So in return, that's only going to keep driving the market, a little bit higher, I think, because that inventory is still going to stay low, and especially here in California and LA County. You're going to see that inventory is still staying where it's at. So that just means that the values will just keep rising little by little. With the rates also moving up a little bit, I think that could affect a little bit on how fast the market will go up. If anything, that's going to kind of hold off on and kind of maybe, settle down as far as keeping those values going up. But definitely, I don't see that going down. If anything, it's just going to stabilize the real estate market a little bit and kind of put like, hey, you know what, we gotta kind of hold these values where they're at. So yeah,
we need to have the builders keep moving, because they're not building enough homes for us to sell, right?
Exactly. So that's something that probably you'll see this year, is a little bit more, builder business, just more properties being built, just to kind of help out with that inventory. So.
And Steve, what do you see from your end, the most popular product right now with this crazy market? With, we've seen like now conventional loans are more favorable than FHA loans when we're submitting offers. What do you see in your end, and what are you doing the most of now? FHA, conventional, VA?
Honestly, just, on my portfolio, I've seen more conventional products being done right now. Just, when you're submitting offers and they're reviewing, like, they're always going to look at conventional as a little bit of a stronger offer. The cool thing is that there's a lot of cool ways to get qualified for conventional, where you don't typically need that 20% down payment that people thought, back in the day, that, hey, you need to have that big down payment. Conventional the conventional loans actually offer a 3% down program for a lot of first-time buyers. So it's one thing to, you always want to check with your lender and kind of look at all your options. Even just because you're a first-time buyer, you don't have to go just with FHA. 3.5% down, you can look into conventional and seeing if that works better, it's more favorable. If there's more, because that's definitely going to help, make your offer look a lot stronger. So you're seeing a lot of that. I think, there's still FHA, there's still VA, which VA, I think it's one of the best products out there. And for the veterans,
I love VAs.
Me too, me too. So definitely, I love doing VAs. It's just helping out the veterans. They helped out, supporting our troops and everything. So that's definitely a great product. So I think at the end of the day, it's really just working with your lender and knowing exactly all your options. So that way you can select and decide which way to go. But definitely you're seeing a lot more VAs out there, or not conventional. You're seeing a lot more conventional loans out there getting done. So.
And are you guys slowing down? Are you guys more busy now this month, February? Like, are you doing a lot of refi versus purchases?
Yeah, for the most part, I think we're seeing a lot of still a lot of purchases happening. So we have a few refis. You're seeing cash out refis to like for remodeling, things like that. But definitely the purchase market is still keeping us busy. So especially with everything going on and with the rates, you're still seeing a lot more purchase applications coming in. And now even with tax season just started, people getting their tax returns, now having enough money for their down payment. So you're only going to see those type of applications going up. Right now is the best time if you're thinking of buying maybe in the next 2 or 3 months, right now is the best time to come in, especially for my self-employed clients. I would always recommend to have a conversation with your lender first before you do your taxes, because that's a huge thing. And huge advantage right now to know exactly how what you're going to be reporting in income, working with your CPA together. If this is your goal to buy this year, is to have that conversation already. So that way you can better prepare yourself with your income, better prepare yourself with what you need to have saved up, and then be ready to buy. So that's definitely the big influx right now is purchase applications. So
great info, great point.
Yeah.
And we're seeing especially with bigger down payment on conventional loans, we've seen a few appraisal that's been waived. Can you shed some light on that? And what's the difference between loans and between properties that have that leverage to kind of remove the appraisal from the get-go? Like some clients, they ask about that. And I know this does not apply for all products and all loans. Can you tell us a little bit about that?
Yeah. So again, with conventional financing, there's a lot of perks and a lot of benefits that come into play with that, especially depending on your down payment, how much you're putting down. So let's start even just with clients that are putting 20% down or more on a conventional product. We tend to get an appraisal waiver, and what that means is that since you're putting a good down payment and the property, that it has its value, and we can see that there's value there. Credit is good, and the loan is solid. The lender is willing to do the loan without having to do a full appraisal. And it's a great thing because at that point, you can come in a little bit more aggressive and be more competitive in your offer, because you can remove appraisal contingencies pretty quickly. And, that's not something that you need to, it's one less step to worry about during escrow. So that's a huge positive. When you're doing 10% or 5% down, we also get desktop appraisals where they don't even have to go into the property to view it. So that just means that you'll get your report a lot quicker. And the desktop appraisals, the way those work is that the appraiser, will just take in consideration all the comps, anything that's being sold in the area, anything that's sold in the last 30 to 60 days, and then just to make sure that the value is there as far as your purchase price. So that right there is very powerful because it's going to save you time. It's going to save you on getting that appraisal report a lot quicker, and avoid having those problems of if the appraisal comes in too low, having to renegotiate and all that stuff. That's definitely something to take advantage of right there with conventional financing.
And here at the Rafe Group, we've been telling our clients and the consumer to refi. For the last few months, we've been calling our clients to refinance, because especially who bought 2-3 years ago, it's never been a great time to then revisit what you have with the mortgage that you have and consider refinancing. Like, in your opinion, what advice would you give a consumer as far as refinancing? Because I know there's some cost that comes with refinancing, and sometimes it does not make much sense because your mortgage has to readjust to 30 years when you've been paying for maybe 10 years or so. So can you shed some light on that and see like who will benefit from refinancing? Just a general and brief before we end this.
I would say, like, especially because of what's going on with the market and equity going up, even clients that have bought property in the last, 12 months, last year, I've had a lot of clients that have come back, and, at that time rates were in the high threes, and being able to refinance and get like a 2.9 or 2.8. And especially for the ones that bought property in that time, 12 months or more, and they put a low down payment. So they have what's called a PMI, the mortgage insurance on their payment. Because the values went up so much, in the last year, they have that 20% equity now to remove that PMI. So, I've had a lot of clients that purchase in those 12 months, and, now they can drop their interest rate down to a 2.9, 2.8, plus remove that PMI. Clients are saving $400.
Yeah, my daughter's going through that right now, so it's it's a great saving, especially when they have the PMI can save you hundreds and hundreds of dollars. That makes a big difference on the monthly mortgage, for sure. Anything else would you like to share with us this morning?
No, just I'm super excited to be part of this, and to be your first guest here. It's definitely an honor, so I really appreciate it, Rima. Thank you so much.
Well, we appreciate you. Thank you so much for taking, time of your busy morning this Friday. I know you have a closing on Friday. Everything happens like crazy for lenders.
Fridays are great.
So we appreciate you being here. And if somebody wants to reach you, can you share your info?
Sure. So you guys can always reach me. My phone number is 661-916-0089. So, and you guys can reach me through Rima. We work together. We've been working together for quite a bit. So, I'm always here to help out.
Well, thank you so much, Steve. Thank you for being here, and have an amazing weekend.
Thank you so much, guys. I appreciate it. Thank you.
Take care. Thank everybody for watching and listening.